Hello everyone, welcome to my channel. This is Easy Accounting channel. Please subscribe to my channel and let's continue our study. Today we are going to study accounting principle. What are the principles that we use to record our transaction? So there are 13 principles that we use to record the accounting transaction. These are regulated by the Financial Accounting Standard Board that are controlling the GAAP and the IFRS. The GAAP is called General Accepted Accounting Principles, while the IFRS is the International Financial Reporting Standard. So these accounting principles are the guidelines, the standard, the procedure that formed our accounting framework. So we have 13 principles that we're going to discuss this afternoon. Oh, sorry, maybe you are watching me in the morning. We're going to discuss now. So the Accra principle, the conservative principle, consistency principle, the cost principle, the economy entity principle, full disclosure principle, going concern principle, the matching principle, materiality principle, the monetary principle, reliability principle, revenue principle, and the time period principle. So let's explain each of these principles to make it clear to us. Accra principle, this is the concept that the accounting transaction should be recorded in the accounting period that they occur. We should not postpone it, we should not omit it, we should record it at that time that the transaction occur. Then the conservative principle is that the expenses, the liability should be recorded as soon as the transaction occur. We should not wait for another period. We should record it in that period that the transaction occur. Now we talk about the consistency principle. This is the principle that once a business adopts an accounting principle, we should continue to use that principle. We should be consistent, not changing the principle. Then the next one is the cost principle. This is the concept that cost, assets, liability, equity should be recorded at their original purchase price. And we have the economy entity principle. This is the concept that different transactions should be recorded for different entities. This prevents the financial result of multiple entities to be entangled. Then full disclosure principle. This is the principle that states that business should disclose full details of all the information in the financial statement. We should not omit any information. We should disclose all details for the benefit of the user. Now we go to the going concern principle. The going concern principle is the principle that the business should continue. Our business will not liquidate or go back. The business should continue, and the assumption defer recognition of some expenses to the future. Now we talk about the matching principle. This is the concept that all expenses related to the revenue generated transaction should be recorded while you recognize the revenue. This is the basis of the Accra accounting. And we talk about the materiality principle. This is the principle that states all transactions in the financial statement should be recorded and not omitted. As I've said, we should not omit any of the information. This is for the benefit of the user. We have the monetary principle that entities should record all their transactions in financial terms, not in value terms. And we have the reliability principle, the concept that objective evidence should be recorded as a supporting evidence in the financial statement. This is be like a proof for us. And revenue recognition principle, this is the principle that revenue should be recorded only when you have substantial completed or revenue. Then time period principle, this is the concept that transaction should be recorded over a certain period of time. Thank you for coming to my channel. Please subscribe to my channel, and I see you in the next video. Thank you. Bye.